So good day everyone, I am John Michael C. Omao and today I will be presenting my answer for the exercise number 3 for the government grant. This is the problem for the exercise 3. On January 1, 20X1, Raquel Company purchased a machine for 3 million with a useful life of 5 years. The policy is to depreciate the asset on straight line basis. The entity received a government grant of 500,000 pesos in respect of this asset. On January 1, 20X3, the grant became fully repayable because of non-compliance with conditions. The requirements are: first, prepare the necessary entries to record the transactions related to the grant for 20X1, 20X2, and 20X3 under the deferred income approach. Second, prepare the necessary entries to record the transactions related to grant for 20X1, 20X2, 20X3 under deduction approach. So let's do it. Now let's begin with the deferred income approach. Under this method, the grant is recorded as liability, specifically deferred grant income. It's recognized as income gradually in proportion to the depreciation expense. So on January 1, 20X1, when the machine is purchased, the grant is received. So meaning, I debited machinery for 3 million and cash for 3 million. And for the second entry is I recorded deferred grant income. I recorded cash for 500,000 and deferred grant income for 500,000 also. On December 31, 20X1, I recorded depreciation and recognized part of grant income. So to get the depreciation expense is I simply divided the 3 million by the 5-year useful life. So 3 million divided by 5 is equals to 600,000 per year. So I debited depreciation expense by 600,000 and accumulated depreciation for 600,000. For the second journal entry is I get the grant income. So to get it is I simply divided the 500,000 by 5-year useful life. So 500,000 divided by 5 is equals to 100,000 per year. So I simply debited the deferred grant income 100,000 and grant income for 100,000 pesos. That is for the 20X1. Now let's go to 20X2. On December 31, 20X2, it's just simply the same as for the previous year. It's just the same entries apply for the second years also. So depreciation expense, limited depreciation for 600,000, deferred grant income, and grant income for 100,000. At this point, 200,000 of the grant has been recognized as income and 300,000 pesos remains deferred. So on January 1, 20X3, the grant becomes fully repayable. The remaining 300,000 is deferred grant income must be removed and the company repays the 500,000 in cash. The difference becomes the loss on repayment of grant. So meaning I debited deferred grant income for 300,000 and loss on repayment for repayment grant for 200,000. So to get the 300,000 deferred grant income and the 200,000 loss on repayment grant is I deducted 500,000 by 100,000 and 100,000. So that 100,000, 200,000 is from the past year deferred grant income. So 500,000 minus 100,000 minus again by 100,000 is equals to 300,000. On the loss on repayment grant is I simply deducted 500,000 by the 300,000. So 500,000 minus 300,000 is equals to 200,000. So I credited then cash of 500,000. Then we still record depreciation for the year. So depreciation expense of 600,000, cumulated depreciation of 600,000. That completes the deferred income approach entries at the deduction approach. In this method, the grant is deducted from the cost of the asset at the start. So the carrying amount of the machine becomes 3 million deducted by 500,000 is equals to 2,500,000. Depreciation is then based on 2,500,000. On year 1, on January 1, 20X1, I debited machinery for 3 million and cash for 3 million also. And second entry is 500,000 for cash and credit machinery for 500,000. This reduces the machine's carrying amount to 2,500,000. On December 31, 20X1, depreciation is recorded as 2,500,000 divided by 5-year useful life. So it means that the depreciation expense is 500,000 per year. So I debited depreciation expense of 500,000 and accumulated depreciation for 500,000. So that concludes our year 1 for the deduction approach. It is not the same by the previous approach, which is the deferred income approach. So next is on the year 2 is on 20X2. Depreciation for 20X2 is just the same for the 20X1. So depreciation expense debit for 500,000 and accumulated depreciation for 500,000 for this year also. It's just the same by the previous year, which is 500,000. So it is the same calculation and same journal entries. Depreciation expense is debited and accumulated depreciation expense is for the 20X3. When the grant becomes repayable on January 1, 20X3, the machine's cost must be restored by adding back into 500,000. So I simply debited machinery for 500,000 and cash for 500,000 credit. Now the total machine cost is back to 3 million since it's already depreciated for 2 years. The remaining carrying amount is recalculated. So depreciation from 20X3 onward is based on the restored cost. So for the new depreciation is I simply divided the 3 million by the 5 useful life, so 600,000 per year. But since 2 years already passed for 20X2, depreciation is adjusted to 800,000. So the depreciation expense of debit is 800,000 and accumulated depreciation of 800,000. It concludes and that's how we record the government grant transaction under both deferred income approach and deduction approach. So it concludes that the deferred income approach spreads the grant income over the asset's life, and the deduction approach reduces the asset's cost immediately. When a grant becomes repayable, we reverse or adjust the related interest accordingly. So thank you for watching, and I hope this helped you to understand to handle government grant in accounting. Thank you.